Welcome. In this video, XCN versus Ondo coin, which is better, and can XCN increase 480%? We'll analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze the XCN.
When carefully examining the chart, it is observed that the price has been moving within a downward trend for a certain period, forming consecutively lower highs and lower lows. This structure is referred to as a downtrend in technical analysis. This trend line, represented by a curve drawn through the highs of the price, indicates that sellers are dominant in the market, that each new attempt at a rally is weaker than the last, and that the price remains under downward pressure. Downtrends are typically characteristic of bear markets and reflect elements of fear, uncertainty, and indecision in investor psychology. However, in technical analysis, every downtrend also contains the potential for a reversal point. Especially when a downtrend line is broken to the upside by the price, it often signals a change in market dynamics. This breakout may indicate that the previous selling pressure is losing its influence and that buyers are beginning to regain control. This situation carries the potential for the price to enter a new uptrend. In the current chart structure, strong technical signals suggest the end of a downtrend. The price has approached the downtrend line, encountered strong buying interest at that level, and ultimately managed to break above it. This move is significant not only from a technical perspective, but also in terms of market psychology. Because this breakout suggests that the trend line, which previously acted as resistance, may now become a support level. In other words, the level that was difficult for the price to surpass in the past is now expected to act as a floor that the price should not fall below. The mere fact that the price has broken the downtrend line may not be sufficient on its own. Therefore, most technical analysts look for confirmation in such breakouts. Confirmation usually comes when the price, after breaking above the trend line, returns to test this level, a process called a retest. If the price holds above this level during the retest, there is a stronger conviction that the uptrend has truly begun. Signs such as increased volume during the retest, decisiveness in candlestick formations, especially high-volume green candles, and upward breaks in momentum indicators like the RSI can all support this view. One of the first signs of an uptrend is the break of a downtrend. After this breakout, the price is expected to begin forming higher highs and lower lows. This situation is interpreted in technical analysis as a trend reversal and often represents an important opportunity for investors. Especially after a downtrend is broken, the first pullback is considered the beginning of the new trend, and from this point forward, the price is expected to gradually reach higher levels. Additionally, breaking a downtrend line often acts as a psychological threshold. During prolonged declines, investors typically lose hope and stay away from the market. However, technical events like trendline breakouts can renew investor interest in the market. This increases the number of buyers, raises demand, and paves the way for prices to move even higher. In this context, the fact that the price is broken above the downtrend line in the current situation may indicate a positive shift in market sentiment. Technically, this breakout can be considered the starting signal of an uptrend. Especially if the broken trend line now remains below the price and acts as support, the rally may gain further strength. In such cases, it is crucial for investors to closely monitor price action and confirm the formation of higher highs and higher lows. On the other hand, another factor to consider in trend breakouts is the risk of a false breakout. In these situations, the price temporarily breaks above the trend line, creates a bullish impression among investors, but then quickly returns to the previous trend. Therefore, it is essential to closely analyze candlestick formations, volume data, and momentum indicators after a trend breakout. One of the most important differences between a real breakout and a false one is the increase in volume. A breakout accompanied by strong volume is generally more reliable. As a result of all these evaluations, breaking the downtrend line to the upside is a highly positive signal from a technical analysis perspective. This indicates that selling pressure in the market is decreasing and buyers are starting to take control. However, it is important to remain cautious after the breakout and monitor technical indicators that confirm price action. If the retest process is successfully completed and the price continues to stay above this level, the upward movement is likely to gain momentum. Furthermore, this breakout may lead to increased investor confidence and attract new buyers into the market. This creates a shift in the supply-demand balance in favor of the buyers and supports the upward movement of the price. Nevertheless, it is also extremely important for investors to set stop-loss levels appropriately and take measures to limit losses in case the price re-enters the previous downtrend zone.
In conclusion, with the break of the downtrend, it is highly likely that the price is entering a new upward phase. However, for this process to proceed in a healthy manner, both technical confirmations and supportive market psychology are required. Price remaining above the trend line, the formation of higher highs and higher lows, and increased volume are all criteria that will show the sustainability of this rally. When all these elements come together, this new phase initiated by the break of the downtrend may turn into a highly profitable opportunity for investors. But we can't base our analysis only on trends. Let's also take a look at other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because BitTunics Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description. RSI, or the Relative Strength Index, is a highly important technical analysis tool that helps identify whether the price is in overbought or oversold territory by measuring the balance between buying and selling in the markets. Through this indicator, investors gain valuable insights to anticipate the momentum and direction of the market. In particular, trend structures formed on the RSI can provide extremely valuable information for forecasting price movements in advance. An upward trend structure forming on the RSI usually indicates a positive price tendency. This rising trend line is obtained by connecting the low points on the RSI chart and gradually forms an upward sloping channel. This channel reflects the increasing buying pressure in the market and a weakening of sellers. In the current scenario we are examining, a clear rising trend line has formed on the RSI indicator. This trend line has been tested several times in the past, and on each occasion, the RSI responded with an upward reaction. This means that every time the RSI touched this rising trend line, buyers stepped in and supported the upward price movement. Such structures are considered highly reliable in technical analysis. The fact that market participants have consistently respected a particular trend line in the past increases the likelihood that it will have a similar effect in the future. Currently, the RSI is once again approaching this rising trend line. If past behavior repeats, the RSI may bounce upward again upon touching this trend line. This type of reaction is not limited to the RSI level. It also reflects on the price chart. Since an increase in the RSI is a technical reflection of upward price movement, a potential bounce from the rising RSI trend line could initiate upward momentum in prices as well. This means that investors may be facing a new bullish wave. Moreover, structures like this formed on momentum-based oscillators such as the RSI are often considered valuable because they tend to signal price movements in advance. Therefore, a touch and possible bounce from the RSI's rising trend line offer a chance for assessment even before a breakout occurs in the actual price. For investors, such RSI touches are generally interpreted as buying opportunities, especially when there is a positive correlation between the price chart and RSI, meaning that each rise in the RSI corresponds with a price increase. The setup becomes even more reliable. In the current scenario, the RSI approaching its rising trend line could indicate that prices are also in a bottoming area. This suggests that prices may be entering a recovery phase. The potential for the RSI to react upward after touching this trend line increases the likelihood that prices will also initiate a similar upward movement. This strengthens both short-term buying opportunities and medium-term bullish scenarios. In technical analysis, the more frequently trend lines are tested, the stronger they are considered. If this rising trend line on the RSI has been tested multiple times in the past, the current contact becomes even more significant. This shows us that there is a strong possibility for the RSI to bounce back upward from this level. Of course, no technical analysis interpretation is 100% accurate, but the tendency of past behaviors to repeat offers statistically higher probabilities. If the RSI bounces from this trend line, a rapid price recovery can be expected. Another important point to pay attention to at this stage is the level at which the RSI touches the rising trend line. If the RSI touches this trend line in the 40-50 range, it is technically considered a neutral zone and seen as a suitable base for a potential upward move. If the RSI is near 30, the touch becomes even more valuable because anything below 30 is interpreted as an oversold condition. A trendline support and upward bounce at these levels could indicate that buyers are beginning to take action and the downtrend is weakening. Professional investors often evaluate such technical setups because these signals typically form ahead of actual price movements and offer early positioning opportunities. Additionally, if there is an increase in volume around the area where the RSI touches the trend line, this further strengthens the likelihood of an upward move. A combination of an upward RSI reversal and increased trading volume and prices is a technical indication that the market is preparing for an upward breakout. Volume-supported RSI reversals often lead to more sustained price movements. This means that investors can base not only short-term but also medium-term strategies on this technical setup. An upward reversal in the RSI increases the likelihood that prices will test resistance levels, and if those resistances are broken, stronger trends may emerge. Moreover, paying attention to such trend structures on the RSI allows for the identification of details that may not be visible on the price chart. Even when there is no clear signal in price levels, structural changes or strengthening momentum on the RSI can provide early signals to investors. Therefore, the rising trend structure currently seen on the RSI and its approach to this trend line is a technical indicator that should be monitored closely. If the RSI touches this trend line and makes an upward break, it may be a sign that prices are about to make a similar move. In this case, resistance levels can become targets and short-term upswings may evolve into medium-term trend reversals. The RSI must not break this trend.
The idea that XCN could replace OND is extremely ambitious, and while technically possible, in practice it requires significant effort, a long-term strategy, and concrete developments. OND has positioned itself as an innovative solution within the staked ETH ecosystem, offering users fixed yield returns via stablecoin or crypto collateral. It holds a unique niche in the DeFi space. For XCN to take OND's place, it must not only replicate similar technical functionality, but also expand its user base, earn trust, scale effectively, and establish a strong brand in DeFi. If XCN truly evolved into an OND-like platform, offering staking, farming, platform interest returns, but with broader reach and adoption, then its market cap could approach OND's. In that scenario, considering OND's current valuation and potential further growth, XCN might carry a speculative upside of roughly 480%, but this projection relies on future strategies rather than historical price action. It must be emphasized, for XCN to transform into a platform like OND, it requires more than a one-off software integration. It must fully open its platform infrastructure to DeFi-based activities, building secure, transparent, and liquid systems that support staking and collateral yield. These systems need to be audit-friendly, user-friendly, and reliable. Critical to this transformation are sufficient liquidity, listings on multiple exchanges, ease of fiat crypto conversion, and strong user acquisition strategies. Key tasks for the XCN team would include expanding its DeFi product offerings, offering competitive staking, farming, and protocol yields, forming institutional partnerships, publishing transparent reporting, enhancing user education, conducting blockchain security audits, scaling liquidity pools, establishing cross-chain bridges, striving for regulatory compliance, and maintaining strong user support. If all these developments materialize, XCN's market cap could grow exponentially, but such strategies take time and involve high technical and marketing costs. OND already has a built-in user base and stable yield model, so for XCN to supplant it, winning over experienced investors and institutions is vital. Users must be sufficiently motivated to switch from existing stable yield platforms to XCN, because loyalty in crypto can be fragile. The 480% upside is only theoretical if XCN truly reaches OND's level, competition in yields, user base, and market cap. But that outcome hinges on a variety of crucial conditions: robust technical infrastructure, user base growth, competitive interest rates, liquidity expansion, sound tokenomics, regulatory and security compliance, and shifts in market sentiment. Before that happens, XCN might move based on short-term technical signals, but a five-fold or greater increase is only realistic through long-term strategic evolution, not mid-term technical patterns. Investors should base decisions not on speculative expectations, but on roadmaps, team updates, partnerships, integrations, liquidity metrics, and technical indicators. XCN holders should watch for roadmap updates that activate DeFi functions, staking, farming, liquidity incentives rolled out publicly, independent audits, community feedback, transparent tokenomics, volume increases accompanying price action, and bullish technical momentum. Risk management is essential. Such a transformation may fail or take much longer than anticipated. Investors should diversify, set stop-loss levels, and stay committed to long-term goals while respecting short-term volatility. Copying OND's model exactly may not be feasible, and the regulatory or market environment could shift over time.
In summary, XCN replacing OND in market cap, functional offerings, and user base is a highly ambitious and potential-rich scenario. If realized, XCN's price could potentially rise 480%. But this requires the XCN team to seriously reshape the project, expand technical infrastructure into DeFi, build user trust and liquidity, attract institutional and retail interest. Otherwise, it remains purely speculative. The key message is the potential upside exists, but its realization depends tightly on technical, institutional, community, and market factors. Therefore, investment decisions should be driven not by hope, but by active developments and up-to-date data.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.